Hello everybody, it's Dylan Milks here for Wednesday, January the 25th, 2012. And wow, what a day it's been today with the announcement of Ben Bernanke's announcement that the U.S. Federal Reserve is going to keep interest rates at 1/4% or 0.25% at least until the end of 2014. So to me, this really reveals several things about the situation in the U.S. Number one, this tells me that the outlook for the next 2 years minimum in the U.S. is very bad, because in order to facilitate or hopefully spur growth, the Federal Reserve is basically charging almost no interest on their money that is loaned to that is borrowed by the big banks. So to me, this really just shows the outlook for the next couple of years to be grim. Now, the question I want to answer here is, well, how can the Federal Reserve ensure that the interest rates will remain low for that period of time without rising? And now here's how. By the Federal Reserve going into the open market and purchasing U.S. bonds, Treasury notes themselves. Now, it's been a known fact that for the last 3 years, the biggest purchaser of U.S. debt has been the Federal Reserve. And in fact, some estimates show that approximately 70% of the U.S. debt is now purchased by the Federal Reserve. Now, this is very worrisome. The fact that it's not the Chinese, it's not the Europeans, it's not Southeast Asia or the Arab world that are buying the debt, but it's their own Federal Reserve purchasing the debt. And to me, this is just one big game, and in fact, I would call it political. This is very political, because what this is going to mean is that the U.S. will continue to run trillion-dollar or more deficits for the next several years, at least, and be able to fund them at an excessively low interest rate. Now, in my mind, this just shows that the Federal Reserve has taken a political role in the American political system. When in 1913, when the Federal Reserve was created, the whole point of it was to be an independent body that was not associated with the government, that was not a government agency, that was not political, that was bipartisan, that would make decisions related to the economy really without any political swing or political influence. But to me, this just shows me that that in fact is completely untrue, and everything completely opposite from the truth. Because now what's going to happen is that, again, as I stated, they're going to be able to fund these trillion-dollar or more deficits at excessively low interest rates. And this game it's very unfortunate, but this is the game that's going on, folks. And the other thing I wanted to point out was we know that the whole theory behind this interest rate being so low, the hope is that it will cause the big banks to borrow money from the Fed and then to turn around and to lend that out to your average Joe on the street who wants to buy a house or wants to buy a car, or also lend it out to businesses who want to expand their business. Excuse me. But in fact, in the last several years, at least for the time that the interest rates have already been this low, what's been happening is that the big banks will borrow as much money as they can from the Federal Reserve at that 0.25 interest rate, turn around and not lend that out to the average Joe on the street or to the small business owner or to the big business owner, but rather take that money and buy 30-year U.S. Treasuries which are yielding about 2.75% or 2.8%. In other words, they're taking that money, not borrowing it to people, but instead financing the U.S. government's deficits, and then pocketing the interest rate spread. So if they're borrowing the money at 0.25% and then they're going around and immediately investing in U.S. Treasuries, that bank is making approximately somewhere in the range of 2.5% per year profit on that on those treasury notes when you consider the fact that they had to borrow that money to buy those bonds. So to me, I would almost say, I would almost use the word conspiracy, because to me this clearly is just a game. It's just a charade. It's just a way that it shows that the big banks are working in collusion with the U.S. Federal Reserve in order to continue to finance these deficits for the next few years. And it's going to be very interesting to see what's going to happen in early 2015. Are they going to announce that they're going to keep the rates low again, or will the forces of the free market finally take over and force those interest rates to go up? Because folks, once those interest rates go up, it's game over for the U.S. and it's not gonna be pretty. It's not gonna end well. So let's just watch over the next couple of years. Keep our eye on the Federal Reserve and what their balance sheet looks like, because the only way that they can sustain those rates at 0.25% is if they themselves are buying U.S. Treasuries in the open market, as well as facilitating the big banks of doing the same thing, to do the same thing. So I suspect we're going to see the balance sheet of the Federal Reserve is going to grow dramatically over the next between now and the end of 2014, and thus allow the federal government of the United States to continue to run these excessive deficits. So thanks everybody for watching, and take care, and bye for now.